Hi, this is Joseph. We're going to take a look at a trade today. Today we're going to be looking at the dollar Canadian. This is January 11th, 2021, and we're trading during the New York session here. So we're just about ready to wrap up this trade, and this one is, what I'm going to do is I'm going to show you the side-by-side of the bar chart on the left, the point and figure on the right. This is a great example, number one, for coaching students who are going through the program to see another example of a live trade, real trade. You can go back to your charts, you can take a look at it. You can use the same time frames that I'm using here so that you can review the setup and then practice this one. And I highly recommend, whenever you find really picture perfect opportunities that you're involved in or you get an opportunity to participate in, to print off that trade, that chart, that trade, because it's a really good idea. It's one that you've executed correctly, and you're going to find it again, because these opportunities, they set up all of the time. They just don't set up every day, every moment. You have to wait patiently. So the key to this game, obviously, is patience. You've heard that many times. People will say, patience makes the trader. And it's very, very true. But one of the things that I learned right away when I started implementing point and figure into my trading system is that it forced me to wait. It forced me to wait. And prior to that, all I was doing when I first started trading, I was just looking for candlestick patterns. And I was using a couple of indicators at the bottom of my chart, and I was just looking for trades whenever the indicators would cross or point up or point down, whatever the indicator was supposed to do. And the same thing with the candlestick pattern. I would just jump in when I saw one. And I didn't know how long to hold on to the trades. I would hold on to the trades too long, and I'd be up 20, 30, 40 pips, and I'd give it all back because I didn't know where to take profits. And none of that happens anymore when I use this analysis. Obviously, we're using Wyckoff price structure, price analysis on the left-hand side on the bar chart. And then I'm using the point and figure to give me a precise entry. And then based on the data on the point and figure, I can calculate how far price is going to go and where I should lock in profits. So one of the things that I'm going to start off with is the left-hand chart. Again, for those of you who aren't too sure that you want to use point and figure or that you want to adopt something like this, a methodology like this, I understand how hard it is to let go. When I made the decision to go off on my own back in 2001 and figure out how to trade, I wasn't sure I was going to be able to figure it out. It's a very scary process. So I understand your emotions and your feelings. But the first thing I want you to understand is that if you're considering using a system like this, methodologies like this, know that this has been in use for well over 100 years. The greatest traders in history use these strategies, this method, bar charts, point and figure. You don't hear a whole lot of people, you don't hear too many people talking about it. And when they do talk about it, the people that know a little something about it, or people who use it, they don't want to get into too much detail. First of all, it takes a little while to explain, and you have to almost convince somebody to try it. Unless they're just kind of fed up with the results and they understand that there's more to the markets than what they know at that point, and that's why they continue to lose. So these are the basics. This is the principle. This is what works. This is what truly works year after year, after all of these years. And again, the greatest traders in history use these strategies, these methodologies. So we're going to start off with the left-hand bar chart, because this is where it all starts. And this is a 60-minute time frame for the dollar Canadian. So I'm going to go ahead and compress this just a little bit. And you can see that I've been working on this range, this low right here printed on the 4th of January. So you can see I've been working on this range for a little while. And you'll notice that there isn't a whole lot of change with the point and figure. And that's because point and figure doesn't change until there's a change in volatility. There has to be something that changes based on the way I constructed the point and figure. So the key in having a good point and figure chart is knowing how to construct the point and figure chart. And I spend a great deal of time with my coaching students sharing with them how I build my point and figure charts for each one of the markets that I trade, from Forex to commodities to crypto, stocks, indices. And at this point, I'm just kind of day trading. So this would be more for day trades, but you can certainly, and I teach all of my coaching students how to swing trade, because I know many of them have full-time jobs, full-time businesses, and they have a limited amount of time. Even though most of my coaching students do work full-time and they have a limited amount of time and they can't always day trade, they were still able to use this time frame, because it's the time frame that I was actually sharing this information with my coaching students. I send updates and I send charts and pics and descriptions of exactly what it is I'm looking at and my phases. This is obviously, I'm looking at it from a Wyckoff perspective. calculating and segmenting these phases to give me an accurate reading as to when I could expect markets to start to break out. And you'll hear me refer to the fact that this is helping me identify when smart money is moving into the markets and when they're preparing this campaign to the upside, a markup phase or a markdown phase. So this is an area of accumulation. And I teach exactly how to do this. I teach you how to read all of this. So this is going to help me identify the testing phase. So if you haven't seen the videos about how and why price moves and who's behind that, watch the video. There's actually another video in the Facebook group. So if you want to join my private Facebook group, you can do that. And I have a 5-day challenge where I start off the process, the 5 days, explaining how and why price moves so that you can get your mindset to understand these principles. It's very important that you understand who is in the market, who's participating at different times, because that will help you determine if you should be trading. So very often you'll hear me say that in phase B of consolidation or accumulation, I really won't be trading. We really don't. You don't really want to trade inside of phase B because it's very choppy, very volatile, and that's usually when the inexperienced traders. You can see that this move here to the downside, you get people that jump in and they think it's another break to the downside because we were in a downtrend, so they pile in down here. But this testing that happens here is also done by the smart money, not only to accumulate more here at this location, but to also test to see if the market's ready, to see what's available, and to see if it's ready to start moving. So this area right here, this first oval that you see, this testing, this occurred on the 6th, and then the actual low down there was on the 6th as well. And then we get this move here, last test right there, that was on the 8th. The 8th, so that was last week. And then it kind of goes sideways here and it stays inside of the middle of this consolidation. But let me show you how it all set up and gave me an entry. So that's usually the question is, you know, when you're looking at the point and figure and you're looking at a bar chart, where's your entry? There are a couple of different places that we can get into the trade, but it's a specific phase of this consolidation. That's the phase that we're looking for. And we want to identify that phase because that's going to give us usually the best entries. They're going to look a little bit different in each case, but the phases, understanding the phases and analyzing the phases as it unfolds is going to help you stay on track so that you know where the testing is likely to be, and then you know where the testing is likely to end, where it starts to make its move to the upside. Again, we're following and tracking the behavior of smart money. Smart money is causing this type of behavior. Some of the wiggles and the jiggles inside of these ranges are done from inexperienced traders jumping in and jumping out and jumping in and jumping out. I was one of them, you know, looking at candlestick patterns thinking this is it, it's going to go, I got to trade it, and they're on the wrong side of it constantly. And they use small stop loss placement and they get stopped out and chewed up quite a bit. That's exactly what smart money needs to have in order to create this opportunity where they create or complete their campaign and their agenda. Their agenda is a specific price target. Now, I'm not going to get into too much detail with the price targets, but I'm going to show you how I was able to come up with the first price target. This is something that I shared over the weekend with my coaching students so that they could capture that trade. And I shared it with them last week as all of this was unfolding, starting from the 4th of January. We were waiting for the opportunity here, and prior to the 8th, we knew that there was going to be more testing. We just had to wait for it. So you'll notice on this last area right here where there was that final test, none of the candles really closed below that support low. This is sort of we refer to this as a selling climax, and then this move right here is an automatic reaction. From that point, you'll notice that I leave my resistance and my support levels right where they need to be, because this helps me bring my attention to how price is moving around this consolidation range so that I can confirm that this is actually the behavior of smart money and I can figure out where my entries are. So this move right here is what we're going to start talking about here, and I'm going to show you side by side with the point and figure how it gave me the entry and how I was able to come up with the targets. So now I'm going to minimize this and we're going to go over here to the left, to the right, I'm sorry. And you can see here, this area that I have boxed in, this is the area in question. This is the area that actually gave me a projected price target. Now, I do want to say that with you hear me say this, with point and figure, we want to have at least 2 counts, meaning 2 different measurements where we could expect price to reach, where we would expect it to reach. And what we're doing here is calculating certain areas that would give us a better opportunity. So we're going to have a minimum count or a conservative count, which is going to be our first count here, and then we're going to have an overall larger count which could incorporate all of this area here, which is the same phase of consolidation, this accumulation phase here with that selling climax. We can measure further if price is going to continue higher. We can add to that count and add to these targets. But initially we want to have a conservative count. It's very important that we have a conservative count because sometimes it will stop. It may just only hit the first target and then stop there. So this is the area that's giving me my first count based on my signal. So this was based on the entry. That's how I was able to calculate that. So I'm going to move the cursor and the crosshairs right around this range right here. You can see there's my entry right here, that X that popped up right above that little resistance level. You can see where I'm moving my cursor on the right-hand side of that bar chart, the point and figure, and you can see how it lines up with the left bar chart and that final low on the 8th. So that final low on the 8th was actually the last test, and that's the area that gave us this column, giving us our entry. And then it pulled back and went sideways. So you can see how it kind of goes sideways here on the 8th and just kind of messes around before the close, and then it breaks out, and then we get the entry over the weekend, and it starts to move right back up all through. It has all taken place since the market has opened. So again, we're going to break this down right now, but I just want you to see again, there's my entry right where I'm moving my cursor on the right hand chart, the point and figure, and I'm going to put the crosshairs there and see how it lines up over here on the left with that last test. This confirmed the area. So again, the question is, where do you get in? Well, sometimes you can get in if you see an opportunity just like this with the test. This was a very confirmed, easy opportunity to get into the trade. Sometimes there's another pullback along the way that could line up with, let's say, a resistance level in the middle, and it'll bounce. That might be another area, another test along the way as it's breaking out. And then another area to get into the trade, if this is going to continue higher, is once it's broken out of this area of accumulation, we can wait for some kind of a pullback if it occurs, and sometimes it'll bounce right off of that automatic reaction that we had earlier from the initial setup of this accumulation phase. Sometimes it'll move right back down and bounce. I've got videos in the membership area under the live coaching section, live coaching calls in that module, and you'll see moves where they bounce right off of that automatic reaction almost perfectly. It happened just last week and the week, a couple of weeks before on Bitcoin. I do it with the pound dollar. It happens all the time. So I've got classic examples of real trades where it bounces right off of there. And again, every time it's going to be a little bit different. It's understanding the phases and then getting your entry right with the point and figure that's going to help. That's what's going to clear all of this up, and it eliminates the mystery of waiting to get in. When should you get in? How long should you hold on to the trade? Where do you take profits? That's the key. So again, coaching students who had a limited amount of time were well aware of this setup because we wait patiently as all of this is setting up so that we can confirm that we're actually seeing a big move. We would rather wait and stay out of this chop and not scalp for just a few pips in here, but wait for a bigger trade opportunity. I'm going to show you this one here. This one paid well over 100 pips. We're going to show you this one right now. So let me go ahead and open this up now that we're going to go over here to the point and figure, and I'm going to do a little something here so that you can see a better picture. So you can see this structure right here is the same structure, the same consolidation, the accumulation structure that you saw on the bar chart. That's that low, that deep low that sort of broke through the support level. A few tests that I said didn't really hit it on the support level here. It did it here, and that was the last test. And then there's that move. This column right here is the column that gave me my entry. And you can clearly see that because I've got 3 columns over here solidifying this area of resistance. So you'll hear me say that quite a bit with point and figure. I'm not guessing where resistance is or where support is, and that also helps me stay away from head fakes. So if I see a move, let's say on a candlestick, and it's poking through resistance, sometimes that looks like an opportunity to go long. I used to make that mistake. Here, when I use point and figure, I don't make those mistakes. I stay away from it because I can clearly see solidified levels of support and resistance. And if you know how to read it, when you spend enough time looking at these charts, you're going to get the hang of it. It's going to be very, very easy, very, very comfortable. It really takes the mystery out of trading. So here's my entry. So the entry right here is this X right there. That's 1.2707. 1.2707. That's when I get into the trade. Now I know where my stop is, and of course there's a few pullbacks along the way, and then it starts to move right back up. So with an entry of 1.2707 my target is 1.2830. So there's a couple of ways you could do that. You could either be flat and done with the trade, or you could lock in profits there and then set the second half of the trade, if you're going to scale out at this first target, at a break-even stop. And then we would have a much further count. This is so highly accurate. It's incredible how accurate the point and figure is. And once you start using it correctly, you're gonna wish you would have done it from the very beginning. And that's why you'll hear me say, sometimes, traders, they jump in, they're excited in this business when they first start in this business, they first start their trading career. I did the same thing. All I wanted was something simple. I threw in a few indicators at the bottom of my chart with some candlestick charts, and I thought, these indicators were going to tell me when to get in and when to get out. And it doesn't work like that. So you've got to start from the beginning. Sometimes you got to go all the way back to the basics and catch and learn the stuff that you missed, the stuff that you should have started off with. But it's not your fault. Nobody told you where to start. So again, understanding these principles and understanding how this works, and I spent a great deal of time in the first module of my coaching course explaining how and why price moves the way it does. The same thing can be done on a larger time frame. So I can structure this chart so that it would mimic, let's say, a 4-hour or a daily time frame, and I could slow it down. But this was still a perfect opportunity because we sit patiently and wait, and even my coaching students who work 40, 50, 60 hours a week or more were still able to catch this trade and get into it when it actually broke above and gave us our signal. Because we sit patiently and wait for that consolidation to develop. That's the cause. So in order for smart money to create an opportunity like this, they have to acquire throughout this process of accumulation. And that takes time. And the testing is all part of it. The testing is also our confirmation as we see it that they're actually doing what we think they're doing. And then, of course, I also have another chart that helps me confirm this spot right here that I was looking at on the bar chart as well with volume. The volume footprint also confirmed this move. So there was another step of confirmation that I also teach, how to count the waves and use volume. And it's not difficult at all. It's just a matter of changing the way that you look at the charts or the way that you were trading before, and commit yourself to understanding how and why price moves. Once you understand this, it's much easier to sit patiently and wait for these opportunities, and then sit and, when you're in the trade, to sit and hold on to the trade. You have a lot more confidence. You know what's going to happen. You know what it's doing. You know who's doing it. You're riding alongside with the smart money. There's just about no way that you can lose in a situation like this. So it's a lot more comfortable to hold on to the trades, even on some of these pullbacks. When you don't know how far price is going to go, and you don't know who's moving it and why it's moving and where it's going to go, it's difficult to hold through these pullbacks. And sometimes you'll find yourself closing out the position, and then you see it continue to rally another 100 pips, and you're thinking, why do I keep missing all of this? Why can't I catch a lot of that? I went through the same thing, and I no longer go through that because I use point and figure, and I use these methodologies that I'll teach you in my online trading course. So again, I do update all of my coaching students with these not only charts that actually confirm all of this, and I break down, and I have indicators and text and arrows and everything that are highlighting everything so they can use it as a study chart, but I also create videos like this, short 5-minute videos that update them and give them ideas as to when I'm going to get into the trade, where I'm likely to hold on to the trade, and how far it's going to